Hey everyone, in this video I'm going to highlight one spectacular Warren Buffett stock that's a screaming buy in July. Now, before I reveal the name of the company, I'm going to quickly go through some of its financial metrics, the reasons why I think the stock is an excellent buy here in July. So let's get right into it, starting with its revenue, which I have pulled up here on the screen. Trailing 12-month revenue, see phenomenal growth from around 8 billion in 2014 all the way up to 22.8 billion in its most recent trailing 12-month update. So the company is growing very nicely. On top of that, when I highlight its cash flow from operations to sales over the trailing 12 months, you could see a nice upward trend in this metric and also a very high figure of 49.66%, among the highest of many of the companies I follow in this metric. So not only is the company growing revenue, but it's doing so very lucratively. Those revenues are generating strong cash flows, right? There's a lot of companies that are growing revenue, but they're leading to losses on the bottom line. They're causing the company to burn through cash. Not this company. It's growing revenue and it's generating increasing cash. And also, similar story with its operating profit margin I have here. Mild growth here from around 55% to 57% most recently, but more impressively is the actual number. A 57% operating profit margin, I believe, is the third highest of all of the companies that I follow. That's truly impressive, especially when you consider its growing revenue and cash flow from operations. You might ask, what are the two companies that are better than this one? Visa and Broadcom, off the top of my head, are the two companies that I believe have better operating profit margins than this one, and I cover more than 100 companies. So it would be surprising to me if there were any more companies that had better profit margins than those that I mentioned here. Now, you might already know the name of the company, but I'm not going to reveal it just yet. I want you to see its valuation first. This is its forward price to earnings. It's trading at a forward PE of 27. Now, it's close to the highest it has traded for all year. And there's a good reason for that. This company has been benefiting from strong tailwinds in consumer spending. It also benefits from inflation, surprisingly, right? When inflation goes up, it's actually a good thing for this company. And I'll explain why in just a minute here. But first, let me reveal the name of the company. This is MasterCard. MasterCard. The company has spent decades developing relationships with merchants and customers, and now that's a strong competitive advantage that's hard for anybody to encroach upon. It's basically Visa and MasterCard that are dominating the market, and they're not fiercely competing with each other, offering discounts and lower prices, hurting themselves in terms of profitability. That's why you see MasterCard and Visa have excellent profitability. They're not fighting with each other lowering prices, so that's a good thing. Now, I mentioned I talk about how it benefits from inflation, and it's because the company takes a percentage of sales as its revenue. So when you spend $100, MasterCard gets $3 or $4 as a facilitator of that transaction when you use a MasterCard to conduct that transaction. So if the same amount of things you were going to buy end up costing 110 instead of 100, MasterCard gets an extra 4% because you spent an extra $10, right? So as inflation goes up, its revenue will also go up. So it's strongly connected to inflation, and that provides you some inflation protection because this stock will benefit when inflation increases. So there you have it. MasterCard, an excellent, excellent Warren Buffett stock to buy in July of 2023. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.